We've talked before about what a Donald Trump taking the office of president might mean. Before we get to who might be on the team, what about inflation? Because you have some concerns inflation at least hasn't gone away yet. Is Donald Trump, if he is president, going to have to deal with inflation, and how will he do that?
Well, we'll see what the Federal Reserve does. My sense is that Jerome Powell failed the marshmallow test. He ate the marshmallow at the November press conference. He wanted to declare victory on inflation too soon. If he'd shown a little self-restraint, financial conditions wouldn't have eased, and the inflation, economic activity wouldn't be reaccelerating as we have now. So, I think despite their predilection to want to cut, that the Fed will possibly have to stay higher for longer. So it'll all depend on what the Fed does.
It's interesting because I've heard people tell me over the past few weeks, months, that this Fed wants to cut, but they can't yet. Why do you think that they want to cut? Why is that the narrative out there?
Because Jerome Powell said it in front of Congress.
That's true.
Right? So I take him at his word.
Coming back to Trump for a second here, your name has come up as maybe playing some role. I don't know whether that's going to happen or not. But have you had any conversations, either with the former president or with his team, that would indicate to you where he thinks he wants to go economically?
Sure. So what I will say is, and I'm not going to repeat private conversations, but I do think one bad narrative in the market is that he will not be able to put together a fantastic cabinet. Is that I think there will be many qualified people who will want to serve, and I think he will have his choice of a cabinet. And I think another bit of misinformation in the market is one piece of a conversation that I will repeat is that President Trump is laser focused on the size of the national debt, on the amount that it's increased under Biden, and the size of the deficits. And I think you will hear from him in the coming months his plan or his wishes to bring both of those down should he get reelected.
Well, Scott, I respect that you don't want to repeat private conversations, but hypothetically, if selected, would you serve?
Look, there's a lot of green in between, as they say in golf, and I am laser focused on my business. I have a great team. We have great partners. We're actually going to be introducing an innovative new financial product that maybe I'll come back to talk to you about in a couple of months. So I'm focused on that right now.
Scott, I'm a little surprised to hear that the former president is laser focused, as you put it, on the debt and the deficit. I think a lot of people on Wall Street would be encouraged by that, but surprised nonetheless. How would he go about doing that? Because he did have big Trump tax cuts, as we call it. He tends to like lower interest rates. He wants higher tariffs. Those sound more inflationary than otherwise.
Okay, so if we just isolate the debt, is the Trump tax cuts could be reinstalled in 2025. Right. So that wouldn't be inflationary, just be a continuation of current policies. And I think it's going to be around spending and growth. And I think the president said publicly he'd like to see oil prices down. He'd like to see deregulation, which would help the economy. So, I think we could see higher real growth, maybe the spending levels being frozen, not cut, frozen, and then a productivity pickup from lower U.S. domestic production.
But tariffs are inflationary. That's what economists tell us.
Right, but they could be good for the budget.
Okay, so potentially good for the budget when you think about the potential impacts of tariffs. Of course, we're having very hypothetical conversations since we don't know what's going to happen in November. But let's talk a little bit about Trump's relationship with the Fed. If reelected, how important is an objective Fed under Donald Trump?
Look, it's going to be important. No matter who wins in 2025, they're going to have a mess. There's going to be very little gas left in the tank. We can't keep running 5–6% budget deficits with this level of unemployment. We've never seen this before. Whenever we've had deficits like this, it's been in a severe recession or during a war. So, something is going to have to be done. And, obviously, whoever's the Fed chair will play a big part of that.
Well, let's talk about who the Fed chair is. The last time around, President Trump was not shy about jawboning Jay Powell. He was very explicit when he didn't like what was going on, thought rates should be lower. Do you think there's any realistic possibility that Trump 2.0 might actually try to remove Chair Powell, saying that there's cause?
Yeah. I don't have any insight on that. I will note that twice in the past 10 days, Joe Biden has called for rate cuts. So, he's getting in the political game now, too.
It's true. There's a bipartisan call for these rate cuts, to your point that Jerome Powell would like to deliver. But we, of course, have the Fed meeting tomorrow and the rate decision. Let's talk a little bit about the market. I was reading some of your notes that you sent over, and the topic of financial conditions. If the Fed makes financial conditions even easier, you write that they will create a big problem for themselves and be worried about a third quarter 2024 bond market revolt. What would a bond market revolt look like at this point?
Well, I think it would look like a failed auction. I think it would look like a dramatic steepening of the curve. I think it could look like inflation expectations getting away from them. So, we'll see what they come up with tomorrow, whether this dot plot is how they signal their further intentions. Do they leave the dot plot the same? My guess is we could see maybe some of the panelists remove a cut for this year. Certainly, they're going to remove some cuts for next year, and we will have a higher terminal rate. So.
Well, but picking up Katie's point, if in fact rates are higher than one might anticipate for longer, that puts more pressure on the bonds, does it not? Because that raises the term premium, if anything, and raises doubts about repaying the debt.
No, look, I think it's all about credibility. And the Powell Fed lost a bit of credibility by waiting so long to get in motion. And they got it back, and then kept eating the marshmallows and not wanting to wait. I mean, we've had this incredible easing of financial conditions since the November Federal Reserve meeting, and it all happened in the press conference. The minutes, the stated. His press release afterwards were all kind of right down the middle, and then he couldn't help himself, and he got kind of very dovish at the end, and financial conditions have eased. Inflation is now ticking back up. Commodities are up. Bond yields are up in 2024.